Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. The segment is sponsored by the Equity Management Academy. I want to move right into the weekly swing gold and silver futures report that we published on September the 9th for gold and silver. And this report pretty much indicated that as we came into this week with the gold market closing at 1334.50, and also the market beginning basically to close below the 9-day moving average, it was the first sign that a pretty much a bearish trend is developing. That's using the 9-day moving average. But it also indicates to you that if we are able to close above 1340, which becomes your pivot point, one of your pivot points, it would negate the bearish trend to neutral. This is one of the components that makes up the algorithm that we use. The weekly momentum indicator is the mean for the week, or the average price, or the pivot point. It's another pivot point that we use, and that also comes in at 1339. And coming into this week, this tells us that because the market closed below the weekly price momentum indicator of 1339, it confirms that the price momentum is bearish. But it also tells you that if it closes above 1339, that it would negate this bearish signal. When the price indicates to us a bearish trend, as it is here, and closes below the mean or the average price of the week, the price will revert back to the demand levels that you see here, buy 1 and 2 levels of 1321 to 1307. And this tells us that if we get down to 1321 or 1307 again, to go long, and then use a 1307 stop. Go long on a reversal stop. So if we get hit 1321 coming into this week, 1321 into this area of demand, which is in blue, to 1307, that this is where you want to buy your long positions as the market is approaching the extreme below the mean. Okay. B2 level is the extreme, the second level, the extreme below the mean of 1307. Let's go into the trading room and see what the gold market has done so far this week. And I'm putting on a daily bar chart that is going to give us a very clear picture of so far what's happened this week. Coming into this week, the sentiment was bearish, as I mentioned to you, and it told you to look to buy into 1301 to 1307, and we seem to be retesting yesterday's low of 1321.22. We seem to be right into this area of what we call harmonic timing. When the daily signals match the weekly signals, that is what we call harmonic timing or harmonic alignment or convergence. And this is what we look to identify the levels of demand. The algorithm defines those levels in blue. And when the algorithm defines those levels in blue, it also gives you the price range that it is expected this demand to hold. So when you see the kind of selling pressure that's coming into this area, and you see from the blue area of demand the reaction that we saw, the reaction that we keep seeing whenever the market comes down to these levels, is truly very bullish. As many times as they have tried, and when I say they, I mean the commercial central bankers, the short side of the market, the short sentiment of the market, the paper short sentiment of the market, because the physical market is extremely bullish as opposed to the manipulated futures paper market, which is tremendously upside down to its mean. And so what these blue levels indicate for us, once again, is the level of demand that we have. And when the price reacts the way it did, or the way it does into this area, it basically confirms that the energy, the level of demand, the energy is greater than the selling pressure. And that's the fight between the bulls and the bears. And that fight between the bulls and the bears is called looking for a price stability, a mean, an average price. And so what we're seeing here, just on a daily chart, you can see that the market is trading between the mean, at the extreme above the mean, at the extreme below the mean. When we add the weekly signals and they match perfectly in a mathematical alignment, that is when it becomes the highest probability to enter into a trade. And that's the signal that we're getting right now on the weekly swing trading signal for gold. And let's take a look at silver now, indicating to us, as we came into this week, to exit your short positions between 1888 and 1840. The silver futures contract closed on Friday at 1937, and the market closing below the 9-day moving average that we use of 1970 is confirmation that the weekly trend momentum came in a bit bearish. But it also gives you the pivot point reversal, that if we close above 1970, it would negate this bearishness. And so that's the first pivot point or indication that we watch, is the 9-day moving average, to negate or activate a trend momentum signal. The metrics that we use, the weekly momentum indicator basically is the mean or the average price for the week, or it's another pivot point. And with the market closing below 1956, it confirms as well that coming into this week, we're slightly bearish. But it also tells you that a close above this number of 1956, it would negate this bearishness. The weekly price indicator tells you where you should take your profits. And this identifies for us, once again, the demand levels that you see here by 1 and by 2. The weekly told us, look to take profits into corrections based on the fact that the market closed below 1956 at 1889 to 1840 this week. And to reversing along and then use the 1840 level as your stop close only in good till cancel order. Okay. And so when we look at the action that we've seen so far this week, a low of 1876.5 was made yesterday. And the market reversed right from that low to close at 17.50. Today we're back down again with a low of 1886.50, which is a second test of this level of demand that has been identified at 1888, 1889. So the swing signal here in silver is the first one that has activated a buy signal at 1889 with a stop at 1840 on a weekly basis. Your first target is 1956, closing above 1956. 2004 to 2072 are your sell 1 and 2 levels of supply for the week, for the rest of the week. If you would like to receive more information regarding the algorithms that we use, the systems that we use to trade letter of direction accounts, self-directed accounts, individual accounts, reach out to me, please. We love to help you during this most opportune time, and I believe one of the most exciting in the history of these markets. This is Patrick MontesDeOca once again. You can reach me at support@ema2trade.com or give me a call at 805 area code 418-1744. Until next time, my friends, be well, take care. We'll speak with you soon.